Hello and welcome to the weekly Outlook video. Just going through the calendar and having a look at next week, see what I'm interested in trading. There's a few main currency pairs. I'm looking at the Aussie dollar, US dollar, the Euro, US dollar, the pound, US dollar, and also the US dollar to Canadian. I may possibly be interested in the New Zealand dollar a little bit later on in the week. I'll just see how that develops. But the main ones there are. So we'll start with the Aussie. Okay, so now the Aussie dollar, you can see I've actually already got a trade on the Aussie at the moment, just for small pip sizes to sell. Now, reason being is obviously we've got the RBA cash rate coming out this week. It may well pull back up to and you see I've marked there this 50% level around about 7846. What I'd really like for it to happen is to pull back to that level, and I could add to my positions, even if it pulls back up to 7880 around there, between that 50% and that 7880 level, which was this high candle here, and then looking to sell that off before the rate decision. Expecting there's a 54% chance that they'll cut rates. There are some people that are saying that they won't actually do anything this time, but I think after the poor capex figures that came out last week and unemployment, I think they don't really have a choice but to keep trying to push that Aussie dollar down. Don't forget, quite reliant on export. This country, they want a cheap Australian dollar. They already cut rates here, and the Aussie dollar just creeped back up. So they want to try and get that Aussie dollar down again. So prior to the RBA rate statement, which is on Tuesday at 3:30 a.m., I'm going to be trying to get into this for sells. So like I said, I've got a short position in there at the moment with small lot sizes. I will try and add to that if it pulls back up, but I'm looking for between 7846 and this 7880 area to try and add positions with a target of 76 and possibly 75 in the midterm as well. Okay, so that's the Aussie. Moving on to the Euro. As we come into, as we get into the week, we also had that big sell-off there from the CPI figure that came out from the US dollar on the US last week. We've got a 50% retracement of 11.280 from the current price where it is at the moment. I was hoping to try and get 11.3 on Friday. A big pullback basically to where I entered last week anyway, and retake that ground. At the moment it just keeps dipping below that 112 area, so the pressure does seem to be on at the moment. We have got the Spanish unemployment change out next week, and we've also got a little bit later on in the week we've got some medium alert data. We've got the ECB press conference on Thursday. Not too sure what to expect from the ECB press conference, to be honest, because we have started to see a few green shoots in the economy now in the Euro. However, they're still under a lot of pressure. They've still got to see. We've got a lot to see, and at the same time, we've got the US dollar increasing in value as well. The US dollar index on Friday made new highs, so we've got to assume that this is going to continue down. You can see we've had a bit of a pullback here, which didn't quite make the 38% level. But to be on the safe side, I'm going to start off the week being a little bit open-minded and just seeing if we get a pullback, and probably targeting the 11280 for a sell in the first part, and then being aware that it could very well pull back to 113 anyway. So that's how I'm going to play out the Euro, but trying to get into that before the week progresses, before Thursday and Friday, because obviously we've got the non-farm payrolls on Friday as well. Okay, so let's and the Aussie dollar there. If we just jump over to the non-farm payrolls to look at that for the Aussie and for the Euro, obviously we're expecting strength in the US dollar again. They've had fantastic payroll figures, but the most thing that we want to see is the average hourly earnings continue to rise. It jumped to 0.5%. It's expected to come in at 0.2, slightly lower this time round. But if we can get it in at 0.3, 0.4, then we're going to see that US dollar strengthen considerably. Okay, so let's have a look at the pound. We've got the official bank rate and the MPC rate statement coming out on Thursday. I do think that's probably going to be a little bit of a not real much of a market mover. The one that I'm really interested in is actually the services PMI on Wednesday at 9:30. Although we've got construction and manufacturing out as well, they don't tend to move the market as much as services does. So what we're looking for here, you notice when we had that big push down, or the strengthening in the US dollar last week, the pound got snagged at 154. It really struggled to get through there. So it's probably going to be the best place to enter at the moment, especially as we're not really, there's no real data to push it down any further than that. We have got Fed Chair Yellen speaking on the US dollar at 1:15 a.m. on Wednesday, which is obviously before the services PMI. So hopefully that will bring that pound back down to that 154 level, maybe a little bit lower. So it may be worth just going down to the next support level and setting a pending order at 153.50, just to take a buy on that, just in case Yellen comes out with particularly hawkish comments early in the early hours, and we get spiked into that, whilst we're snoozing. Okay, so that's what I'm looking for the pound to get into that for buy, and then we've got Governor Carney speaking later on in the week. I'm expecting him to be hawkish and to play up the fact that the pound aren't going to wait for inflation before they raise interest rates, and that they could be on the cards sooner than what the market expects, which is what we've been hearing from some of the other MPC members as well. So that's what we've got to expect in there. That's what I'm looking for. Also, other things that could possibly strengthen the US dollar against the Aussie, or weaken the Aussie, I should say, is we've got the retail sales figure out and the trade balance, and the RBA. Deputy Governor Lowe speaks on Thursday as well. Okay, so moving on to the Canadian. The Canadian's a little bit trickier. We are going to have a quick look at the chart there. What's been happening with the US dollar Canadian is obviously they had a rate cut the other week, and they're coming up to another rate statement this week. Not really expecting them to cut rates. However, if they do make a surprise cut, then obviously we're going to see quite a substantial rally. The reason we're not expecting a rate cut is because Governor Poloz said the other day that the previous cut was an insurance policy against falling oil, and the CPI data actually came out pretty good on Canada. So the oil doesn't seem to be affecting the economy as much as what the market might have expected it to in the first instance. However, it doesn't mean that it's not going to affect it later on. It might just be having a slower effect than what we first anticipated. If the central banks see that themselves, then they might make another rate cut, just to drop things down a little bit more, to give them a little bit more insurance. If that happens, obviously we're going to see a rally on that. I'm not looking to get into this prior to the announcement unless it falls right down to 123.50. Okay, right down to the base of this trading range here. That's the only time I'll get into it prior to the announcement with quite a tight stop loss, because it could go either way. And it's looking more likely that it could actually strengthen a little bit the Canadian. The only thing that obviously is, depending on what they say and the reactions, then it will depend whether we look to get into that before the non-farm payroll. But at this point in time, it's going to be a secondary trade. If I say I miss the Aussie, I miss the euro, and I miss the pound, then I'll look towards the Canadian dollar. Okay, thanks for watching, and I hope you can make some pips. I'll see you next week.